Discussion is Sandip Ghose, Managing Director and Chief Executive Officer at Birla Corporation. We also have with us Rakesh Arora, founder in Go India Stocks, who tracks the sector, of course, very closely. Good to have you both on board. Thank you so much for taking time out. Mr. Ghose, I'd like to begin with you. Given that we have just recently seen Ultraexament announcing that acquisition of Burnpur Cement's grinding assets, I just want to understand what the outlook is on the sector as a whole. Do you think that the consolidation within the space is only going to continue?
First of all, Apeksha, thank you very much for calling me in for the show. And I'd like to begin with a health warning, statutory warning. I'm speaking in my personal capacity as an observer of the cement industry for a long time. And if I may say, as somebody who is coming from outside space, so I see it more, slightly on an independent footing than cement insiders. And whatever I say does not represent the views of my company or the group I work for. Having said that, I think this hype about consolidation, which has been going on for a long time, is highly exaggerated. And I'll come back to tell you why. But before that, I would say my view is the way the cement sector is behaving just now is behaving very sensibly. While one could always expect more, people could expect, a bull run or, prices going much higher. But I think if you see overall, the moderation of what has been happening in the market is very much, I would say, within the sensible band. And that is something which one needs to take note of. And there has been right from the beginning of the year, if you see what was predicted in terms of volume growth and in the price scenario, it has largely lived up to that. Nobody was expecting a huge price shoot up during the year. People had all projected, all analysts, all firms, they had projected that price will remain more or less stable. And that's exactly what has happened. Even during the festival season of last month, that's November, you see the prices have been largely resilient. So I wouldn't attach too much importance just now to all this talk about consolidation. I'll answer this Burnpur cement thing, and then we can come back to this topic later after we've heard others. Burnpur cement, I think, is a very small readjustment of capacity. It's not a big capacity. Ultratech has been in talk with them for a long time, and it's just kind of a local readjustment. It's not a major development, and it does not indicate a larger trend. Sorry.
Right. Let me also encourage Rakesh Arora to join in here. Rakesh, a company would always say we have a 5-year view and we take a 10-year view. But markets would say we have a QSQT view, which is quarter se quarter tak. In that, the problem is that coke prices have gone haywire. In that, the problem is that raw material prices have shot up disproportionately higher, and cement companies really have not kept up with what the impact has been. So while the big picture is great, we all love India, cement will grow if India grows. But in the QSQT outlook, there is a bit of a challenge. Rakesh Arora.
I think there's an improvement QOQ both on realization and costs have kind of stabilized QOQ. So I don't really see too much of margin pressure. Actually, margin should expand in Q3 as compared to Q2. Demand obviously has taken a knock in November because of festive season, and also North India normally, during winter, sees some curbs on, agglomerate mining, etc. So, and even construction activity takes a little bit of backseat. So demand is slightly weak, but it is better QOQ. And Q4, I think, would be the best of the last few quarters that we have seen. So near term is looking decent. It's not really as bullish as one would have liked it to be. But, there's more competition intensity that we are seeing. And but things are on an improvement trend.
Rakesh, cement is one commodity which cannot be imported. Cement is one commodity which, in a sense, enjoys a complete multiplier impact when it comes to the GDP growth. It's a play on real estate and it's a play on capex. The sector is doing So if I look at the demand drivers, the demand vectors for cement, I think last 24 months it's been strong. Real estate is growing, roads are getting constructed, buildings are getting constructed. But yet some would argue and say that it's been a okay setup for cement companies in terms of the numbers what they've reported.
So I think the spoil sport was actually, the industry major who has been pushing aggressively to gain market share. And this has happened in light of acquisition of wholesale companies by Adani. So there's a little bit of tussle going on at the top. And that has meant that, EBITDA margins, which could have expanded to around, say, 1,200 to 1,500 rupees per ton, given the demand scenario and the capacity utilization. But little bit of aggressive posturing by the top player has meant that, margins are reasonable. They're not weak, but they are reasonable. At the same time, this also means that there's a lot of consolidation opportunity coming up. Because margins are not that great, smaller companies are folding up. Either they have to expand or they have to sell out. And the second scenario is currently playing it out.
All right. I wanted to understand from you as well then, Mr. Ghosh, as to what the outlook is in terms of the general elections and how you expect the overall demand to pan out for the cement space at the time.
Before I go, I'll just make a comment about the demand, which Rakesh mentioned. And, if you see the demand pattern in the last few months, it has been evening out. October was a very good month. November was subdued because of there's a whole series of festivals and various other factors like harvesting. So you had Chhat, you had Diwali, and the rest of it, which kind of subdued. Similarly, we have seen in August and September. So overall, as Rakesh is saying that, the demand has been steady, and we'll of course expect to see how things go in the next quarter. Now, elections, if you ask me first, I thought is the key point is to see the results, which will be out tomorrow. Or tomorrow, in the sense, tonight we have the exit polls. You'll have Sunday the results. So that could have. One should see an impact in terms of sentiment for the general elections. But by and large, I don't see, again, too much of a turbulence or disturbance between now to the general elections, except for the fact that you will have the model code of conduct and everything setting in probably from by February. So after that, especially the central government schemes and expenditure on those might slow down. But till then, I think you should see a fairly steady demand. If there are changes of government in some of the states, as some might anticipate, that could cause a little bit of dislocation in terms of the state spending. But if there are no changes in government, you will find the overall developmental and infrastructural expenditure and expenditure in welfare schemes such as PMAY will remain on top gear between now to the elections.
What is the outlook then, Rakesh, from you when it comes to the overall valuations within the entire cement space? Do you believe that, some of these stocks are trading at expensive valuations? Is there any scope for derating according to you?
Unlikely these stocks will get derated. Meaning they are expensive valuation, but they have been trading at these levels for a pretty long time. So this has kind of become the norm. The driver is obviously going to be improvement in earnings, and as I said, Q4 looks pretty decent to me, and maybe even Q1 of next year should be okay before the post-election slowdown actually hits the industry. So next 6 or 8 months are looking decent to me, and I think the stocks are going to be well supported.
Okay, fair enough. And wanted to understand from you then, Mr. Ghose, as to what the outlook is when it comes to the company in specific. Are you on track to achieve that 15% volume growth?
As I mentioned, Apeksha, at the beginning, I would not like to comment on the company, but to answer your question, we are not changing any of our projections, which we have only recently shared both in our results release as well as our subsequent conversations with investors on telecalls.
Try my luck. It's Avan this side, by the way. But thank you so much, nonetheless, for taking time out and joining in, Mr. Ghose, as well as Rakesh. Good to have you both on board to understand better the dynamics of the cement space. All right, let's move right